Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I'm going to show you a pattern I love to use to identify when markets have been kind of washed out and may reverse in a big way. Before I get started, however, if you are just finding us on YouTube, please make sure to subscribe to the channel, and also make sure that if you're not already watching this video in HD, you can change your setting with the little gear down here on the right. And you may have to stop and start the video again, but click the gear, elect HD, the video will be a lot clearer. I think you'll like it. So let's get right to the topic at hand. We're looking at EWG. We're looking at EWG, which is Germany as an ETF. And we're looking at it during the week in which Greece has a deadline of later this week, Friday, to make a debt payment. And, based on the media, everybody's worried about it. Based on the market action, I'm not so sure how many people are worried about it. But based on the market action, there might be a really interesting opportunity here. And I'm saying that because of the market pattern that I'm going to show you. Now, before I get into the pattern, you'll also notice I have moving averages on my chart. And so the magenta one here is the 50-day, and the gray one is the 200-day. And we look at these two moving averages very closely and the relationship. We break the market down into market phases. There's plenty of ways you can find some free information on market phases in the market gauge tutorials section, in the little big view section. We'll also have ebooks about it, but for right now I'm not focused on the 50 and the 200-day moving average per se. The pattern, however, does fall right on top of the first correction back to the 200-day moving average after a period of a declining slope. So that pattern in of itself is very powerful. But the pattern I want to focus your attention on right now is the fact that EWG has nice consolidation over the last, couple of months, and it broke down. It clearly broke down below that support level, and it's a good support level. If you go back to the left here, you can see this was a swing area in here. Even if you take this high over here, you can see that it even took that level out as well. But before this breakdown occurred, we would have been looking at this zone in here as basic support that you really didn't want to break below this this level in here. So the breakdown initially may be viewed as bearish, but a reversal back into it provides a great opportunity for a trade. Now, what does make this more interesting and potentially more volatile is the fact that we've got the Greek situation, and Germany's likely to respond to any serious negative impacts that the market perceives if Greece does in fact default, if Greece gets further closer to moving out of the EU. But with the fundamentals aside, in fact, the fundamentals feed this particular trade, what I will be looking for is to see if the EWG ETF can close back up above this 29 level. Let's get the exact level here. So this low here is 29.24. In fact, a better way for me to do this would be to do this. So I want to get a line that's pretty close to the first time it tried to hold it, or the last time it tried to hold it right here, which is a 29.21 level. These other levels are 29.29, and this low in here is 29.24. So I would round that all down to 29.20. And there's 2 points I want to focus on for this market to close above. One is that support level that was broken, and it was broken by 2 days, 2 closes below it. That's a good break. Now, if it reverses and closes above it and above the low day, and even better would be to close above the high of the bar that broke the support. And so that's going to put us up here at around 29.20. 29.42. So if we can close over 29.42, that would represent a good kind of flush of breaking the support and back up. And the fact that it sits right on top of the 200-day moving average makes it even more powerful. So close over here, stop under this low, and a wider stop would even be down below the 28.58, which is the 200-day moving average. Now, even if you don't take the trade right on the day that it closes, the other way to look at this going forward is that we get a nice big move higher, and then you look to buy the dip back against this support again. Again, this whole trade is predicated on the market now based on a close back over this, which it hasn't done yet. So I'm doing this live in the market. If we close back down below this 29.20 level, trade's over. I mean, the potential's even over, at least for now. You got to come back and close into the range again, and then use the low of the break below the range as your stop. And even better, as I said, would be to widen it out a little bit and put it underneath the 28.58. So I'd say underneath the 28.50. Now, for some, you might be saying that's an awfully wide stop, but let's make sure that we're looking at this with the same perspective. So my perspective on a trade like this is that the market has just tested the bottom of this range, and therefore if it doesn't want to go lower, the next objective is the top of the range. But the whole context of this chart is it's in a bull phase that just tested the 200-day, or I should say, if it gets up to the top of the range, it'll be back in a bullish phase. Right now it's in a warning phase. So if it gets to the top of this range, I'd much rather have been long down at the bottom of the range, and let's see if it can break out, because if this consolidation has just been tested on one side and then breaks out to the other, my objective really would be to be getting into a trade now that could test the 32 level. All right, so if I'm getting in a trade in around 29.50 and risking down to 28.50, and I see a potential profit objective of 32, I've got well over a 2-to-1 reward to risk ratio there. So from that perspective, I don't think the stop is wide at all. And I think, you know, if Germany is able to turn around and Greece is resolved or defaults or whatever happens, this just happens to be lining up with a really nice pattern with a tight stop in the context of fundamental reasons that could have pushed the market, stretched the market down to a point where it could put in an intermediate or even longer term bottom. And that's how I would take advantage of it. So I hope that helps, and I'll see you in the next video. And if you'd like to see more videos like this, make sure you either stick around marketgauge.com/tutorials or get there for the first time. Thanks a lot, and I'll see you in the next video.